I'm Duncan McLeod, and this is TCS, the TechCentral Show, brought to you by TechCentral. Subscribe at youtube.com/TechCentral and hit the bell icon and you'll never miss another episode. Now, Robert Brine, you are the, get your title right, Director of Cyber and Intelligence Solutions in Southern Africa for Mastercard. We're going to have a fascinating discussion today about security in the payment space. So thank you for joining us.
Great to be here, Duncan.
Great. Thanks, Robert. So I thought a good starting point for this discussion would actually be to get an understanding of what Mastercard is. I think everyone knows the Mastercard brand. I had a look, by the way. You're the 19th most valuable company in the world by market capitalization. So clearly there's good money to be made in whatever it is that Mastercard actually does.
Good to know.
You're a payments processor, but you're much more than that as well. Just maybe take us through what's involved underneath the brand that everyone knows.
Yeah, absolutely. And I sit in a slightly different function within Mastercard, but more on that in a second. But Mastercard, the way that we've kind of moved is probably away from what you thought we were in the past. Origins around master charge, association with the priceless and brand and so on. And we moved much more into becoming a technology enabler. Yes, payments at our core. And the function that I really sit in has been there from the start, really around enabling trust, what it means to a card holder or a consumer or a business, trying to transact, get paid, identify yourself, and also to do bits of commerce and various other different functions as well. So the entity that I sit in Cyber Intelligence Solutions, we're effectively a fairly large security and technology provider. Working a lot in the risk space, really enabling that component of trust and increasingly things like artificial intelligence. How can we wrap different data elements and attribution around how our consumers may be behaving, what they're trying to do, and also what the fraudsters on the other hand are trying to intercept.
Right.
And that's really where we come in to protect and enable this safety and security component.
So the business has changed quite a lot in just even in the last few years.
Yeah.
Would you say Mastercard is a technology company or a financial services company?
I think we're probably a bit of both. I think we're probably straddling both of those sectors at the moment, and increasingly it's really moving around who were our customers in the past and embracing a whole new segment of rails, of capabilities and platforms.
Yeah.
And increasingly it's about how can we speed up access to those.
So a fintech company in essence.
In a way, yeah, we're enabling many of the fintech success stories that you hear out there. So a lot of our strategy around enabling this is really success with partners. So it's really about enabling the fintech success stories to happen. And often it's our underlying tech and platforms and so on that is there, all the while preserving this golden thread of trust and security.
So Mastercard's customers are the banks predominantly. Is that correct?
Yeah, traditionally it would be a banking customer, so either an acquirer, merchant, and issuer, and in some way enabling payments. And now increasingly, we're broadening that segment focus to look at things like digital partners, even government as a customer. There's a lot of different segments that we're now starting to service, and that's really where we've made some key investments. Particularly around AI and different platform access and this, data access. How do you do that in a strong governance and ethics tight-bound way, but also to accommodate things like GDPR and data protection acts and increasingly elements around trust.
Must be an incredibly heavily regulated industry that you operate in.
For sure, and very different segments. So on a day-to-day basis, we might be looking at 15, 16 different jurisdictions, and then within that subset, even within an element like cyber, we talk about cyber domain, and of course there's any number of different specialisms within that as well.
Tell me a little bit about what you're doing in the field of AI. Obviously, AI has been in the news a lot this year already with ChatGPT, and now even Elon Musk is saying that he wants to start developing his own AI platform and is hiring engineers to do that. A lot of excitement in that space. Tell me a bit about how Mastercard wants to use AI.
Yeah, so I mean, one of the acquisitions that we made, a fairly recent acquisition, although not that recent in terms of AI terms, the speed is pretty rapid. But going back to 2012, 2013, we were a Briterian customer started by a really interesting guy who was at the forefront of a number of different patents in that space. But we've taken this strong view that, look, if we can do data attribution in an ethical way, wrapping privacy by design around it, it actually means that we can send, when you do a tap at a terminal, we can send your recent history of transactions in a blind model, scoring all of the 3.5 trillion plus transactions a year, but an individual model. So it's going to come back with a very specific fraud score around, this is Duncan, or Duncan's card, his card number. We've seen him do recent transactions in this geography in the past.
Okay.
It's nothing unusual. The IP address all checks out. So that's kind of how we've been able to take a consistent platform of AI and really good rollout, to the extent that we can churn out an AI model in something under 6 weeks to be able to tackle a specific use case, everything from homeland security through to fraud, financial crime, money laundering, that sort of thing.
And so do you work, I imagine you work very closely with the banks on that. When I walk into my local supermarket and tap my Mastercard at the point of sale, what's actually happening behind the scenes? That transaction is then going back to the bank, my bank, or to the retailer's bank?
A bunch of different things might be happening in any one flow.
Yeah.
So a tap at a merchant or at your supermarket, there could be anything from 10 to 12 different standards, including EMV, including the contactless encryption. So it's a very secure method of doing the payments world. We talk about clear auth and settle. We also have an authentication leg that says that, look, this is really Duncan. We're able to do multi-factor authentication or risk-based authentication, often seamlessly, so that there's no need to step up or challenge you. And that's the reason why these new payment methods are actually so quick, and we can do it in near real time, fractions of a microsecond, to be able to send that to all of the different parties in the transaction, whether it's the merchant, their acquirer, your issuing bank, and in some cases even to look at some of the different elements where we've got a fraud attack actually happening. The AI is actually able to be smart enough to trigger that, look, this is way above what we'd see in normal parameters. And so in that kind of way, we're able to pass an alert or a notification through to your bank to say, we think something unusual is happening. Please reach out to Duncan and verify that he's done this transaction.
And most of this is all automated, I imagine.
It's all automated. So we really embraced the element of machine learning, and the algorithms are really smart. And it also has put a lot of the issuer or bank-led controls for them to be able to do it self-service, and also to, in real time, update that model. So every transaction that we see, effectively the model is being updated as we go.
Now, you're Director of Cyber and Intelligence Solutions. Tell me a bit about what your day job entails.
So sure, day job is really dealing with the broad segment, cross-section of customers. So anything from a bank to a government entity. It could be somebody in the central bank, financial surveillance department looking at money laundering or looking at crypto transactions, for example, all the way through to a merchant trying to get paid or to raise a chargeback, looking at a disputed transaction that they want to query. So that is kind of day to day for us.
And the security side of things is a big focus for you as well.
Yeah, for sure. So increasingly, it's this kind of convergence of a lot of risks. So as well as AI, we've really had to wrap our heads around cyber significantly. We suffer something like 60 attacks a second.
Good grief!
It could be as much as 200 attacks.
These automated attacks, mainly.
Yeah, absolutely. And so this distribution, we kind of see this in the working environment that we've gone for a gig economy, and everything as a service. Now, including fraud, including cyber attacks, including attacks on payment methods. So that's definitely what we've got. We've got this very distributed threat. Of course, there's the big syndicates that are still out there globally operating. But you've also got the millennials kind of tweeting or putting up on social media different attack methods and sharing vulnerabilities or exploits.
Darn millennials. South Africa is introducing something called RPP, or Rapid Payment Platform, I think it stands for. Yeah. It's a Reserve Bank initiative. I think informally it's being called PaySharp, and it's being launched sometime in the next week in South Africa officially. Is Mastercard involved in that at all?
So on the RPP, in terms of some of the enabling tech, worldwide we've seen different jurisdictions and different central switches, different banking sectors really look at payment rails that suit their market. An example would be UPI in India. They use different message formats. So even though it might be an ISO message format from international standards, we can choose different deployment methods, I guess. So some of what we do is to convert and to translate different message formats into a common one that can hit our decision management platform, so that in real time, Duncan's push payment or pull payment or card transaction can actually be scored or decisioned in real time to say, is this good or bad? Or is there an element of maybe email redirection or business email compromise to say that this isn't actually a conveyancer trying to do a transaction or receive funds. It's probably a fraud syndicate, and they popped up before because we can see this URL in a different domain, and therefore we can actually start to flag merchants.
I want to talk a bit about how the payment space has changed since the advent of the COVID-19 pandemic. Obviously, there was a big shift in consumer behavior. I often have a laugh with people about how consumer attitudes have changed towards tap to pay in South Africa. Before COVID, people in my own family even would say, that's not safe. I'm just no, I don't want to do that. I don't even want this card to be enabled. Then COVID arrived. No one wanted to touch point of sale devices. And South Africans took to it like a duck to water, and now are going to the supermarket and everyone's either tapping their phone or they're tapping their watch or tapping their card at the point of sale. So that COVID has really changed consumer behavior there. But what is the impact of some of that consumer behavior change been on the market, on financial companies like Mastercard?
Yeah, so for sure we've seen consumer adoption levitate and really exponential growth around contactless adoption. Of course, it's all about customer experience at the end of the day, but also about security. So actually one of the safest transactions you could make might be a contactless transaction. So instead of handing over your card or giving the fraudster or the cashier an opportunity to skim using the track and the magstripe and all of those different vulnerabilities, that encryption is staying in your possession. Or you're using a token like your watch or your device or your phone. And so it's really had multiple elements of control and different interventions to keep that payment method or the form factor consistent so that we can see it. It also allows for things like tokenization, obfuscation of some of the other data which might have been read off the magstripe. And so this combination of consumer adoption, the speed at which you can do the transaction without having to enter a PIN, hopefully, without being challenged, and also the actual speed at which the merchant receives funds in some element is actually a lot better.
It's quite interesting to see this massive change in consumer behavior. We've come a long way in terms of security on these devices. I mean, chip. When we initially got bank cards, they used a magstripe originally, didn't they?
So, well, if you look back at the kind of 1960s charge card, it would be an embossed card number, physically printed. It could almost be made out of wood. And funny that we've come back to recycled cards now, or to environmentally friendly plastics and so on. But the magstripe kind of was where the standard started. But of course, you've got to think about how we did data storage in those days. And from the days of kind of cassette tapes and reels and so on, digitization, it kind of didn't really carry through to the payments industry all that quickly. And the challenge is, of course, that you didn't have that much data storage available to be able to read what you needed to do to verify that, look, is this Duncan or not? So you were typically looking at card number at the point of sale device or at the merchant's terminal. With EMV and the chip technology, the extra data storage as well as the ability to add encryption and things like key exchange and a whole bunch of other different things to verify, validate what you had, that's really sped up the speed at which the transaction can occur. But it's also injected a whole lot of different elements around security.
Why does my bank card still have a magstripe on it?
So it's probably going to be demised fairly soon,
Oh, is
but one of the reasons is that different jurisdictions around the world were either slow to adopt because of national standards, or
The
because
US was quite slow, wasn't it?
yeah, the US was one of the later countries to drop it. I think the other one was probably Indonesia, and
Okay.
some of that is this tension between what technology is out there versus and available versus what's practical to roll out quickly at scale, and also what kind of the banking sector either regulation or adoption is like.
Now, EMV is a standard that was developed by, in fact, it's short for Europay, Mastercard, Visa, if I remember correctly. And those were I'm guessing, were the participants in creating that standard. I imagine there are other participants in the process now. But this was developed when, in the 1990s?
So mid to late 90s, EMV is really there. And in fact, some of our leadership team, were kind of instrumental in pulling that together.
Okay. And how, just maybe take me through how that changed the market, because you had a market full of magstripe cards up to that point, and there was a lot of, I imagine, fraud going on as well on the back of that, which had necessitated the need to move to EMV, or the players in the industry saw that fraud was going to become a big problem with magstripe cards, and so the world had to move to EMV, and that's happened. But it's a process. It's taken an incredibly long time. Of course, the adoption, etc. Some countries slower than others. Maybe just take me through what the impact was of launching EMV on the market.
So I think the dynamics, you've got to just wind back a second on the reading of a card number. So we had the old zip-zap machine where you take a carbon imprint.
I remember those,
particularly on credit cards and when you're traveling.
I'd forgotten about those
high-ticket items.
Hotels and stuff.
It's a distant memory, but that also meant that there was a carbon copy, literally, of the card number present in the merchant for all kinds of things around what we know as account data compromise. So this was your card number can be intercepted or breached by somebody, and effectively they can then do a transaction or create on an embossing machine a fake impression of that card number so that you can then do zip-zap transactions somewhere else. Same technology or same attack method really is what we're trying to do or prevent with EMV. But of course on a magstripe, when you swipe the card, effectively if somebody puts a reader or a skimming device into the ATM or into the POS machine or whatever it is, then effectively you're providing the track information to be read.
Yes.
And therefore, that's really why the scale of attacks ramped up. With the chip adoption, it's really meant that we verify with the PIN. So we're providing enough technology to be able to do a key exchange so that if Duncan were to provide the incorrect PIN, we can actually have a response to verify, look, do these two keys or locks and keys intersect, is it a match? And if not, well, then we can decline the transaction. So it removed a lot of risk for the merchant and also for the banks.
Obviously, the other thing that happened during COVID was a lot of people, for the first time, started buying on stuff online. E-commerce took off in a big way, including here in South Africa. What has the impact of that been? Has there been a spike in fraudulent activity, taking advantage of consumers who are new to the space?
So I think in terms of overall growth, in the e-commerce and online space, similar to contactless, it's really exponential adoption. But we might talk about something between 50 to 60% incremental in that consumer behavior. You didn't want to go out. In many cases, physical lockdowns actually prevented a lot of that past pattern. And the other side is that, of course, the fraudsters weren't able to go and do their in brick and mortar store fraud. So they've also moved themselves and their posture and the resources that they've got into the online space as well. The other side is that, of course, consumer behavior has meant that you get so much more choice. And I think some of that's the impact of what we're seeing around data, merchants taking themselves online, SMEs taking their business into the online space. And a lot of what we do is to try and protect them in that new frontier, I guess, to keep the risk away.
I think it actually leads us on quite nicely to my next question, and I really want to explore, and maybe over a period of a couple of minutes, going into what consumers in South Africa, I suppose this applies universally, but maybe there's some local specific issues that are worth considering. But how should consumers be going about protecting themselves when they are shopping online? What are some of the key things they should be doing, and what are some of the things that that perhaps even someone who's tech savvy like myself might not know about?
For sure. So I think the first choice that you've got as a consumer ultimately is to choose your bank. Think about consumer experience. Am I getting good value for money here? Is the experience frustrating? What's the experience like for the merchant as well? And I think that also guides a lot as to where you shop, and that kind of reinforces.
So you consider the website you're on. Does this look legit?
Yeah, 100%. So you've got to think about the web traffic. Is it a well-known domain? Does it look genuine? Is it on a secure site? Is the quality of the build and the web page that you're actually shopping on, is it good or not? Does it offer a guest checkout? Do you have to compromise a whole lot of personal information in order to be able to actually do the transaction? And a lot of times we see a very high cart abandonment. So you'll know if you're on a good site or not. And often friction is a good indicator that, yes, there may be security there, or there may be use of standards, but it can also be that it's poorly designed or not that secure.
And you should always look for the lock in your URL bar, and if that's missing, that's a sure sign of trouble ahead.
It's probably a good indicator that something's amiss. And then when it comes to the actual payment, to do the transaction, to perform the checkout, how seamless is that? Good banking setup, a lot of integration, and what we do around authentication should be aimed at, particularly with the new EMV standard, removing a lot of that friction.
Yeah.
And in some cases even making it challengeless or frictionless.
Yeah. I mean, shopping with credit cards online, I mean, this was not what credit cards were originally designed for. They were designed for use in stores. Do we need a new model? Do we need something other than a credit card to allow us to shop securely on the internet?
So one of the things you could do, for example, is to create a virtual card. So this is going to be tokenized. You won't ever get the plastic, but you could enroll it into your token, your watch or your device, your cell phone, in order to do those transactions. But the same card number, or you could add additional card number in order to be able to do your online purchases.
Yeah.
And one way that some consumers would do it is to set up a different card number for recurring transactions or your streaming services. And in that way, you get a lot tighter control.
Yeah.
And some ways, what we've done is to enable platforms so that the power is really in the hands of the consumer to be able to set limits, to turn off channels, to disable ATM, for example, or to turn off cross-border. And in that way, we actually see that there's a lot better insight into how their spend is happening.
Right.
A lot less likely to have a transaction slip through that might be fraudulent. So we've also sped up the chargeback and the dispute process to inject some of that intelligence, so that if you don't recognize a transaction, in an ideal world, you should be able to do something in your banking app to initiate not a formal chargeback process,
or a query,
which typically was quite a lengthy set of forms and ultimately going to an arbitration, which is quite costly for everybody and frustrating for the consumer. But if you can speed that up, it ultimately means that the fraudster can be pulled out of line at the terminal at the airport for an airline ticket that they've bought fraudulently. Or the merchant could ship the TV that's been purchased through fraud. If the chargeback gets raised or queried by the cardholder quickly enough, then it might not even leave the distribution center. So the merchant's not out of pocket. As a cardholder, you feel very much that this is a trust relationship with your bank. And so that's kind of how the stickiness, I think, is people are going to be less likely to move banks if the experience is good. And similarly, you might be reaching out to a fintech or a wallet provider to get access to some of those different form factors, which are maybe slicker and the consumer experience is better.
Yeah. I've been using virtual cards quite a lot in the last few months, actually, particularly on websites that I don't recognize. I'll set up a new virtual card. And I mean, what sort of protections does that give me? I mean, obviously, it's still connected to my principal account. I suppose, if there is any suggestion that there might be fraud going on, you can immediately just cancel that virtual card and not have to cancel your full credit card, for example.
So when you set the virtual card up, you might be able to change different parameters. For example, the channel that it actually gets used on. So it'll be disabled by design for ATM. So if you shop on the website, the fraudster's means of cash out is effectively blocked.
Okay.
So it's really giving you, as well as your bank, a lot more insight and control, and making that ultimate fraud fraud logic
Yeah.
work a lot better.
Yeah. I know some of the banks actually allow you to switch off your card, your principal card,
Yes.
when you're not using it, as an additional means of protection.
Yeah.
But I need to investigate that. I'm not sure if my bank offers me that sort of granularity in
Yeah.
terms of what I can do with those cards, but I'll need to investigate. Before we wrap today, I want to spend a little bit of time talking about crypto,
Yes.
because obviously there was a lot of talk about crypto actually becoming, or the blockchain becoming, the underpinnings of the future financial system, and you're smiling quite broadly there. So, but I don't know what your views are on all of this. But there was talk at one stage. I don't think it's so much of a focus anymore. But certainly at one stage there was talk that the blockchain could power the global financial system. What work is Mastercard doing around crypto, around blockchain? And I think there was a report just in the last few days actually that said that both Mastercard and Visa are perhaps dialing back some of their focus on crypto, given that the market's in a bit of a funk at the moment. Maybe take me through what some of the work is that Mastercard has done in the crypto and blockchain space, and where you see this technology going in the future in the specific context of financial services.
Yeah, for sure. Look, let me address that the recent press article. You know, in terms of what we're actually carrying on, our focus on how we use the underlying tech behind distributed ledger and blockchain. And we've made a lot of investment around where we see individual use cases. Some are really working well. A lot of these are going to be embraced in a lot of different components of financial services. And so, although the hype around crypto assets itself, you know, we're still continuing with our work in that space. So I think that article is maybe misleading.
Okay.
On the other side, the encryption and increased transparency that blockchain actually gives you, there's a lot of benefits to our side of things in the security space. Increasingly, you know, you might be doing a money transfer or different rails, and how you can utilize some of that transparency to actually give insight into what's going on in the transaction, who the receiving party is, and so on.
You can now buy your groceries at Pick and Pay with Bitcoin. So there is some. Well, certainly the retailers are showing some interest in it. I don't know what the adoption rates have been. I suspect low. But from a Mastercard perspective, what are your views of some of these things that are going on, like the Pick and Pay acceptance of Bitcoin at the point of sale?
I mean, there's this speed of adoption is always interesting. So we can look at crypto transactions at a card activity level, overall at a market level, let's say.
Yeah.
And although we're kind of into the crypto winter scenario around some of the overseas news, you know, different exchanges and wallets and so on blowing up or bust out scams. I think those have been a factor behind some of the technology from the start. Moreover, you know, you've got to think about the transaction fee or the gas fee, or how much is the consumer actually paying? What's the arbitrage around that? And so it kind of remains to see whether it gets mass adoption so that you can actually buy your coffee, or low value transactions, and what's the consumer experience like. So we wait and see, you know, how that adoption happens, and equally we're kind of layering the technology to be able to manage what we do in the card and traditional payments and banking space, and then be able to layer similar capabilities, but also future-proof them from things like, you know, quantum computing, some of the changes or the challenges to cryptography that might be coming down the line.
Interesting. So in terms of blockchain, I think there are so many different types of blockchain out there. Mastercard might even have its own blockchain. I don't know. But do you see this being integrated into your platforms seamlessly at some point, so that that Bitcoin transactions would flow over the Mastercard network? I'm not the expert in this area, so guide me a bit here. But
Sure.
But where do you see this going ultimately? Are you bullish on crypto as a payment mechanism personally?
Look, I think that decentralized finance and some of the opportunities that this gives, from low value transactions all the way up to treasury transactions, and how interbank transactions might be happening, moving stores of value, with transparency, has great potential to unlock a whole bunch of things. From when an engine is purchased through to the service life maintenance, you know, all of that is not necessarily payments related, You can update the service schedule, for example, automatically to be able to track a part number in a very complex aero engine, for example, or in a rolling stock locomotive or something, to be able to then track, look, at what point is this going to fail, likely, how does it improve the maintenance schedule, and so on. All the way through to the transactions elements, and how quickly can that actually occur, what does it mean from a capital and flows point of view. And the other side is that as you're trying to balance treasury concerns and things like that, this is also going to remove some of the obfuscation that maybe the bad actors that are embracing some of this technology, that those guys will actually be blocked out. So that's kind of the future that we think about is if there was universal adoption as a consumer, I think the form factor is not actually going to matter. And the underlying tech, it's probably going to suit either the shop that you're shopping at or the bank that you bank with, or you as a consumer. You're all going to get a preference. And you're also going to understand that, look, this is going to be built around trust. What's the consumer experience at the end of the day? How many click-throughs does it actually take for me to do a transaction successfully? And then also, what's the comeback? Have I got the right or the ability to do a dispute or a chargeback, or to query the transaction to say, hey, I tried to pay for a bike on a used goods site, and guess what? I've been duped out of my money.
Robert, just in conclusion, I wanted to ask you, what are the 2 or 3 most exciting things, or what are the 2 or 3 things that have got you most excited in this space at the moment?
So I think what's really interesting is to see this convergence of how what's relevant for a large bank, multinational, Pan-African, you could to name it, is easily as applicable and transferable to what the SME is doing. So a lot of the thinking around how you get customers, how you keep them involved in your business model, I think that's really interesting. And a lot of it comes down to the trust between the different parties, how you can use the different tech, and equally about how accessible it is. And I think that's a really unique space that we're moving in. It's really dynamic, and at the same time, the same risks that big multinational bank might have, it's also being pushed down. That's where some of the fraudsters and the bad actors' focus is now, is on the SMEs. And so it's really interesting to see how we can help in that space to be able to do that, full asymmetric kind of range of mom and pop store all the way up to multinational bank, and equally who they do business with, whether it's consumer, whether it's different business to business risks that come up, and equally how the speed of adoption can really be sped along.
Excellent. Some very, very valuable insights. Robert Brine is Director of Cyber and Intelligence Solutions in Southern Africa for Mastercard. Thanks for taking the time to come through to our studio today.
Thanks for having me. Cheers, Duncan.
Thanks, Robert.
Cheers.